This is the Best Stocks to Buy podcast. We use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week. This podcast is made possible by Conner Management Group, a registered investment advisor firm. If you've been enjoying these podcasts, we're sure you'll like our Saturday morning newsletter just as much, if not more. It is informative but light and includes personally curated articles on investing, money, and just plain leisure fun that we think you would enjoy. Just visit our website at www.connermg.com and click on newsletter to subscribe. All right, on to our presentation. Hi everyone, this is Mathis Conner with Conner Management Group, and this week we're going to look at the best small cap stock to buy right now. Today is Monday, June 8th, 2015, and here on the opening slide, we see that this company is in the broadline semiconductor industry, and we see its 6-month upside potential at 13.6%. Going on to the next slide, we see that the name of this company is called Vishay Intertechnology Inc. Their ticker symbol is VSH. Once again, this company is in the broadline semiconductor industry, and we see its 6-month upside potential at 13.6%. 13.6% is on the low end of the companies we have covered as far as upside potential, but we just believe that that's a reflection of the times, and although we only see 13.6% for over the next 6 months, over the 6 to 12 month period, we see a substantially larger upside potential for Vishay Intertechnology. Going on to the quick facts slide. Here's a business summary description. Vishay Intertechnology is the largest U.S. and European manufacturer of passive electronic components, that's resistors, capacitors, and inductors, and a major producer of discrete semiconductors, that's diodes, optoelectronics, transistors, and additionally stress sensors. Their website is www.vishay.com. That's VISHAY. The company is headquartered in Malvern, Pennsylvania. They were founded in 1962, and the number of employees they have stands at 22,600. Onto the products and services slide. What we have on this slide is the Vishay logo, and we also have a description of their products and how and where they are used. As mentioned, Vishay manufactures electronic components such as capacitors, resistors, sensors, transistors, power modules, things called thyristors, diodes, and rectifiers. You know, the building blocks of a lot of electronic products. They have a very large customer base. Here on the slide, you see logos of their many large original equipment manufacturing customers. They've got Philips, Samsung, Honeywell, Hewlett-Packard, Sony, Siemens, and a bunch of others. Additionally, they list out where some of their products are heavily used, and let's see, they use a lot of their products in the industrial sector, as you can imagine. Additionally, the automotive, they also have listed, computers, of course, and within avionics and the military space, in addition to telecommunications, say cell phones, LCD televisions, and also some medical equipment as well. Let's see, they state that in 2014, about 30% of their revenues were from sales of resistors and inductors, 17% of the sales were for capacitors, 23% to diodes, and 19% for transistors, and the balance was for infrared optoelectronics. They do sell worldwide. Let's see, in 2014, 24% of their products were sold in the Americas, 39% in Asia, and 37% in Europe. So they have a very large worldwide footprint. And just to give you a color on where most of their products are sold, 34% of their products are sold in the industrial market, and 24% sold in the automotive market, with the rest just spread out across in smaller segments of telecom, computing, consumer, and a few others. On to the metrics slide. The annual revenue for Vishay Intertechnologies over the last 12 months was $2.5 billion. Their net income over the last 12 months was $123 million, and the cash from operations was $281 million. The operating margins for 2014 was 16.0%, and for 2015 they're tracking to be 16.5%. Onto the valuation metrics. The trailing PE ratio right now for Vishay stands at 16.1, and the forward PE ratio stands at 11.0, which means that over the next 12 months, analysts expect earnings to increase substantially. The PEG ratio right now is at 1.1. Anything around 1.0 is a sign of value. The price to sales ratio is at 0.8, and the price to book ratio is at 1.1. So those metrics all say that this is not an expensive stock. Rather, it looks somewhat inexpensive. And additionally, its enterprise value to EBITDA ratio stands at 3.3. The dividend yield for Vishay is a respectable 1.8%, and the average dividend payout ratio over the past 3 years is 10%. But that's a little misleading. Vishay's just started paying a dividend in 2014, and its dividend payout ratio in 2014 was 32%. On to the price chart for Vishay. Over the last 12 months, Vishay is down 19%. A lot of that pullback came in around October of last year, and it has since pulled back a little bit more. But the outlook is pretty positive for Vishay. They have a worldwide footprint, and additionally, increasing demand in the automotive and industrial sectors is expected to be favorable for them. On to the next slide, the why now, the bull rationale, and these are our reasons on why we think the stock will be under pressure to increase, and it's pretty straightforward. The company is expected to have continuing increases in sales per share as well as cash flow per share. So increasing sales and revenues over the next 12 months is expected, and additionally, its valuation metrics is expected to be fairly low over the next months. And a low valuation metric implies bargain, and it usually creates pressure for institutional investors to buy the stock. So really two pretty straightforward reasons for buying the stock right now: increasing sales and revenues and a low valuation metric in the near future. And on to the summary slide for Vishay. We rate their financial statement quality as good. I mean, their debt, their total debt is about $450 million, and their net income for 2014 was just over $100 million. And actually, the debt they have due over the next 5 years is $200 million, and they could handle that debt pretty easily. Additionally, the operating margin we rate as flat, went from 16 to 16.5% for what's expected for 2015. The price pattern trend, the stock is down from a year ago, but we just think that creates a good buying opportunity and makes this more of a value play. Additionally, our overall market outlook right now is a bit negative. We're seeing an increasing number of overvalued stocks right now that might create some headwinds for Vishay, but the outlook is positive. They have a very wide geographic base. They're sold worldwide, and they're sold in a number of industries, and they sell to a host of customers. So the recent closing price for Vishay was $12.68, and our 6-month price target is $14.29, and that gives this company a 6-month upside potential of 13.6%. And as we mentioned, Vishay does have a favorable outlook. Actually, our 6 to 12-month outlook for the company is substantially higher, but we just present our 6-month time frames here. So it's for all these reasons that we believe that Vishay Intertechnology Company is the best small cap stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Bye. Just to close, remember that Connor Management Group is a registered investment advisor. In addition to being a source of quality stock investment reviews, we are money managers, not financial planners. Our sole goal is to grow our clients' savings and retirement accounts in a personalized manner as quickly as possible using one or more of our strategies. We can manage all or just part of your IRA account as well as a regular taxable account. Just visit us at www.connormg.com to review our service, or just give us a call at 281-947-2201. Have a great week.